The stock market crashes on a Tuesday. Layoffs don't start until Friday. That gap isn't a coincidence. It's the system working exactly as designed. Here's the uncomfortable truth most people never hear. Financial markets don't reflect the economy. They front-run it. And right now, that matters more than ever. Because every time markets move fast and the real world moves slow, someone gets protected and someone else absorbs the damage. Let's start with what most people think markets do. They believe markets measure the economy. Jobs go up, stocks go up, growth slows, markets fall. That story feels clean. It's also wrong. Markets don't wait for fact. They trade expectation, not what is happening, but what might happen next. Think of markets less like a thermometer and more like a rumor mill with trillions of dollars attached. When new information appears, a rate hint, an earnings miss, a political shock, markets don't pause to verify. They instantly ask one question: how does this change future cash flow? Because stocks aren't ownership of companies today. They're claims on profits years from now. That single idea explains almost everything. Now here's where timing gets strained. Economic data is slow. Jobs reports look backward. GDP is revised months later. Inflation numbers describe prices that already changed. By the time the public sees the data, markets have moved on. Markets live in the future. The economy lives in the present. That gap is where reactions happen. Let's walk through a real sequence. A central bank hints at higher interest rates. Nothing changes that day for most people. No one loses a job. Rent doesn't rise overnight. But markets immediately do the math. Higher rates mean more expensive borrowing. That means lower investment. That means slower growth. That means future profits are worth less today. So prices fall instantly. Days or weeks later, companies react. They delay hiring. They cut expansion. They protect margin. Only then does the real economy start to feel it. From the outside, it looks like markets panicked for no reason. Inside the system, the damage was simply scheduled. Here's the uncomfortable part. Markets aren't predicting the economy. They're shaping it. When asset prices fall, companies lose access to cheap capital. When valuations drop, executives change behavior. When credit tightens, layoffs become prudent decisions. The market moves first, and the economy follows its lead. This creates a strange illusion. People see markets recover while life is still hard. Stocks hit new highs. Wages don't. It feels unfair because it is. Markets respond to future profit. Households live on current income. The system rewards whoever can wait and punishes whoever can. Now add leverage to the picture. Most market players aren't just investing, they're borrowing. Hedge funds, banks, institutions, they operate on margin. That means small price moves can trigger forced selling. So when expectations shift even slightly, the reaction isn't gentle. It's violent. This is why markets crash before recession and rally before recovery. They're not reacting to reality. They're reacting to the possibility of reality. Meanwhile, public narratives lag behind. News headlines explain yesterday's move. Politicians respond to last quarter's data. The public debates whether a slowdown is real. Markets already place their bet. This is the quiet absurdity of the system. Trillions move on whispers, models, and incentive, while millions wait for confirmation that arrives too late to matter. Over the long run, this gap keeps widening. Data gets slower. Markets get faster. Algorithms trade in milliseconds. Economic pain unfolds over months or years. The result is a world where financial signals lead reality, and reality scrambles to catch up. So the next time markets drop before layoffs start, or soar while the economy still feels weak, remember this: you're not watching panic. You're watching the future being priced unevenly. The real question isn't why markets react first. It's who benefits from always being early and who's left living in the delay.